Well, the answer is I do believe in dividends in a great many situations, including many of the ones companies in which we own stock. The test about whether to pay dividends is whether you can continue to create more than $1 of value for every dollar you retain. The equation is pretty simple, but the practice doesn't necessarily follow logic. When a stock can be bought well below its business value, that probably is the best use of cash. But I think the best use of cash, if you don't have a good use for it in the business, if the stock is underpriced, is to repurchase it, and if it's overpriced, you got no business buying in a single share. But a lot of companies do it. We like the companies in which we have investments to pay to us the money they can't use efficiently in their own business. In some cases, that's 100% of what they earn. In some cases, it's 0% of the earn. We own some stocks that don't pay any dividends. And there are many businesses. Take See's Candy, which we own. See's Candy has paid everything virtually out to us that they've earned because they do not have the ability within See's Candy to use large sums, which they earn, intelligently in their business. So it would be an enormous mistake for See's Candy to retain money. So they distributed Berkshire, and we hope that we move that around in some other area where that dollar becomes worth $1.10 or $1.20 in terms of present value terms. If we do that, the shareholder, whether they're taxable or whether they're not taxable, whether they're a foundation or whether they're living on income even, they are better off if we retain the money. Because if they were going to get $1 in dividends and it became worth $1.10 or $1.20 in market value immediately on a present value basis, they're better off selling a small percentage of their stock and realizing the required amount that way, and they will have more money when they get all through doing that than if we paid it in dividends. The frictional costs to American shareholders in sort of changing shares for all American business as a whole, those frictional costs are probably not much different than the entire amount paid out by American corporations. So, but getting to the individual corporation level, a company that expects to regularly earn more than it can profitably employ in its business should be paying out dividends. Take a subsidiary of ours like See's Candy. We would love to expand See's Candy to double or triple its present size, but it doesn't work. We've tried it a lot of different ways. So it should be paying out its earnings. If See's Candy were a standalone company, we would simply pay out a lot of the earnings, practically all of the earnings in dividends, just like we do now, except it goes to Berkshire. If we wanted to return a bunch of cash to shareholders, we would, if our stock was undervalued, we would go to the shareholders and say we think it's cheap and we think that this cash can be better used by you than by us, and we will therefore be repurchasing at what we think is a discount intrinsic value, and the people that remain will be better off, and the people that get out will get out at a little bit better price than they would otherwise. In terms of dividends, you get into an expectational situation, and for most companies that pay a cash dividend, it doesn't make sense to bounce around the dividend from year to year, although private companies frequently do that. And like I say, we do that individually within Berkshire, but because we have this ability to redistribute money in a tax-efficient way within the company, we probably had more reason to retain all of our earnings. It's obviously something we think about at Berkshire when we have $30-odd billion around. If we can't figure out a way to employ that over time, it's a mistake to keep it in corporate form. But we have this expectation, and I think it's a reasonable expectation, that we get to put it to work. If we ever came to the different conclusion, if we thought our stock was significantly undervalued, we'd probably figure in terms of dispersing it through repurchases, particularly where now dividends and capital gains are neutral for individuals. If our stock was not underpriced and we fell, we would probably do something by a dividend. It's not going to happen soon, however. But if the time comes, and it will come someday, if the time comes when we don't think we can use the money effectively to create more than $1 of market value per dollar retained, then it should be paid out. And we do it ourselves with our subsidiaries. Some subsidiary can pay us a lot of money one year and not so much money the next year. But with public companies, a lot of people do buy stocks to obtain dividends, and they hope for regularity, and there's a signaling aspect to it and everything. It's obviously, as long as you're telling the truth to your shareholders about what's going on so that you aren't manipulating the stock downward or something. If it was a public company, and it was at one time, you could argue that something approaching a 100% payout would make sense there. But most management's worrying about earnings falling off at some time in the future would rather establish a lower level and therefore ensure regularity of dividends by going with a conservative level. So I would say that once you establish a dividend policy with a public company, you should think a long time before you change that policy in a material way. But I think the best use of cash, if you don't have a good use for it in the business, if the stock is underpriced, is to repurchase it, and if it's overpriced, you got no business buying in a single share. But a lot of companies do it. When a stock can be bought well below its business value, that probably is the best use of cash. It's something the Washington Post did on a huge scale back in the 1970s. Teledyne may have bought 90% or something or close to it of their stock back. And that was the reason a very significant percentage of companies bought stock back in the past, because they actually thought it was selling for less than it was worth. Like I say, that can be abused if you do various things to bury your stock in one way or another. But that wasn't the usual case. Stock repurchases were relatively unpopular in those days. They've become quite popular now, and to the extent that I've been around a good number of them and been able to pick up on what I thought was the underlying rationale, if not the professed rationale, I think it's often done for people that are hoping that it causes their stock price not to go down, and often done at prices that don't really make a lot of sense for continuing shareholders. Charlie?
Yeah, the dividends are a very interesting subject. If you count the unnecessary stock trading and the cost of investment advice and the cost of making a lot of errors and the trading costs in and out, I don't think it would be too extreme to say that now the total amount that's paid out in dividends is roughly equal to the amount that is wasted in all this trading and investment advice. So that the net dividends that come to the shareholders are approximately zero. This is a very peculiar way to run a republic, and very few people comment about it.
If you were 30 years old again and had your first $1 million in the bank, how would you invest it, assuming you're not a full-time investor, you have another full-time job, you can cover your expenses with other savings for about 18 months, no dependents?
Well, I'll be very simple. Under the conditions you name, I'd probably have it all in a very low-cost index fund. Somebody I knew was reliable, and it'd probably be, might be Vanguard, somebody where the cost was low. And because you postulated that you're not going to become a professional investor, I would recognize the fact that I'm an amateur investor. And I would feel that unless bought during a strong bull market, which this hasn't been, I would feel that was going to outperform to a degree bonds under current conditions over a long period of time, and then I'd forget it and go back to work. And in the end, why should you expect? I mean, you'll get a perfectly decent return over a 30 or 40 year period by doing what I suggest. And why should you expect more than that when you don't bring anything to the party? The salesman will tell you that you'll get it, but you won't. You will not get that advice from anybody because nobody gets paid to give you that advice. And so you will have all kinds of people telling you how much better they can do for you than that, and how if you just give them a wrap fee or give them commissions or whatever it may be, that they will do better, but they won't do better. On average, 1,000 other people like you do the same thing. That group of 1,000 will do worse if they listen to the people that make pitches at them. And Charlie?
Yeah, it's in the nature of things that you aren't going to have a whole lot of screamingly successful professional investors. You've got a great horde of professionals taking croupiers' profits out of the system, most of them by pretending to be professional investors. And that is in the nature of things too. But if you don't have any rational prospects of being a very skilled professional investor, well, of course you should compromise on some simple thing like an index fund. I would give you another word of warning. Do not judge stockbrokers generally by the ones you meet at this meeting. We attract some of the most honorable, intelligent stockbrokers in the world. They are not representative of the class.
Really, from the moment we get up to when we go to bed at night, we get to do all kinds of things. We get this associating with wonderful people is about as good as it gets. And we're biased, obviously, but we think we live in the best country in the world and have all kinds of good things. I mean, just imagine. Well, we could have stayed in my grandfather's grocery store and it would have been hell. I mean, how could you be sour about life, being blessed in so many ways? And then the amazing thing is that when Charlie's 84, I'm 77, and we've slowed down, I'm sure, in a lot of ways, but we pretend we haven't, and it doesn't seem to bother us. We get along fine. Oh, basically, if Charlie and I can't have a decent mental attitude, who can? I mean, we get to do what we love doing every day. We do it with people that are not only cheerful about it and like us, but they do their jobs extraordinarily well. They like their jobs too. Great partners, great managers, great families. There's just no reason to look at any minuses in life. And the rest of the time, I am doing I'm doing whatever I love day by day by day by day, and I do it, in air-conditioned offices and with all kinds of help. And we're forced to do virtually nothing that we don't want to do. I have a trainer that comes 3 times a week. I think she's probably here, and she may think I'm a little begrudging in that particular activity, but that's only 45 minutes 3 times a week, and to focus on that, it would be crazy. So, we really do count our blessings because they've been many, and they continue to come forth, and we'll enjoy it as long as we can. There's not much more to it than that. Just be sure you get the right spouse. That's enormously important. But it's enormously important who you marry. I mean, it's a huge decision, and if you're lucky in a couple of things like that, as Charlie says, the problem, is that we talk about that fellow that spent 20 years looking for the perfect woman, and then he found her, and unfortunately she was looking for the perfect man. So you may have a problem in that respect. You're going to have a happy life, and you're going to behave better as you go along. I mean, it's a lot easier to behave well when things are going your way and you're enjoying your work, and you're thinking about things every day that are the kind of things you like to think about. And Charlie has a lot better advice than I have on that. Go to it.
Well, of course, you'll do better if you develop a passion for something in which you have a considerable aptitude. I think if Warren had gone into the ballet, nobody would have ever heard of him.
Oh, I think they'd have heard of me, just in a different way, Charlie. Well, the chances are, if you find something that turns you on, you probably do have some talent for it, though. I mean, I don't think I could have gotten turned on by ballet.
Yeah.